Hello, everybody. It was another up session overall for the stock market, but once again, the oomph factor behind the move just, wasn't there for me. Volume came in below average for the second up session in a row, and once again, the Nasdaq, from where it opened to where it closed, could barely go anywhere. Only up, actually up less than 1 full point, up about 70 cents or 0.70 from where it opened to where it closed. So the bounce has been nothing short but very lame. However, in this QE world that we are living in, lower volume bounces normally turn out to be extremely bullish, I will remind everyone. So I would not be expecting the market to definitely fail here. However, if we are in a maybe possible normal world following the May 22nd highs, we should fail around these levels and continue to move lower. Or what I would probably think will happen as we continue to go out throughout the summer, we'll just continue to chop about in between the May 22nd highs and then right now the June 24th lows, and that would be the most frustrating event for bulls and bears. So why not expect that to happen more than anything else? The New York Stock Exchange and S&P 500, as you can see, did the same thing as the Nasdaq, rallying on lower volume. Looking at IWM, the Russell 2000, it had a nice day, but as you can see also, it had lower volume on the overall day, and I show you that volume because the Russell 2000 doesn't really show volume on Telechart, and as you can see, it barely closed open or close higher from where it opened. And as you can see, it is also finding resistance right at the 50-day moving average. So right now we remain under a sell signal. Hedges aren't necessarily working out wonderful. That's why FAZ with this second close below a downtrending 50-day moving average, which is really kind of irrelevant, but it is closing below the 10-day moving average. However, so slightly, it is still going to be a 20% takeaway. And so I think I have about 1,000 shares in FAZ. So I'm going to want to sell 200 shares in FAZ to get down to where I feel is good. And I wouldn't doubt that we're going to continue to sell off from this cover because our recent hedges have a funny way of triggering, barely shaking us out and then reversing right back in the correct direction that they're supposed to go. But in saying that, the UVXY is still trending above the 10 and 50-day moving average, and the SQQQ is still trending above the 10 and 50-day moving average, so no need to pare back on that. Another troubling sign possibly for the market overall is that despite the up day today being up 0.85%, long scans aren't that great, and I have two full sells. EXH is selling off below the lows of the signal date on heavier volume once again. I've had enough of this one now. It is closing below the 50-day moving average, so even though it is still above the intraday lows of 624, it's going to be a full sell. I'm going to go ahead and get out because that's 3 above average volume sell-offs below where the long signal was generated, so it's time to go. And BBSI gave a confirmation close below the 50-day moving average on above average volume. That is a 100% sell, so we got to get out of that. And then one of the more disturbing things, if you're very bullish on this market, is that our new long position in MDX, which started out perfectly, mind you, with this move on 21, it isn't perfect because we don't have max green bop in the entire base from May, so it's not perfect, and we're not under a buy signal. There you go. So 2 notches against. So despite the nice initial buy signal and the very, very, very nice ad signal that we got the very next day, and I would say that that was an extremely strong ad signal, here we are 2 days later having to cut our losses. Now, it's closing below the 20-day moving average and 10-day moving average, but the 7-11 close keeps it above the 710 lows on 624, and the 710 lows was going to be my final cut loss area, so the 1 cent close above that will keep me in 25% of this position, and we'll see if it can't work out here at the 50-day moving average. And somebody asked me how come I didn't go long MDGX back here when it would have had a perfect move off the 50-day moving average with max green bop in the entire base and huge accumulation up that right side. Well, granted, this is a perfect signal, and if I would have missed this signal, I would declare myself as an absolute moron. However, MDXG at this time of this signal was an over-the-counter bulletin board stock, was not listed on the NASDAQ. It got listed on the NASDAQ on April 25th, 2013. And unfortunately, which you'll see this a lot in OTC BB stocks that get listed, if Telechart had these stocks on their system, we could play them. And if we would have done that, as you can see here, here is your buy signal, 1221. Here's an add signal, 1224. And watch what the thing does since then. You can see it climbs above the 50-day moving average perfectly. And had that been our initial long signal, which is signals that you used to see I swear to fucking God, all of the time before 2008, we'd be sitting on a 111% gain from December 21st to now. So in about 6 months, 111% averages out to be about 222% annually. Not too shabby. But we are in the current environment we are in, so deal with it. That's all I can tell you. Now on that note, since we had an update, we did have some nice moves. Data, Tableau, software, Tableau, software. If you know French, then you know how to say it correctly. Semi-ass breakout below a downtrend line, but still not hitting new highs. Still, it's one to definitely watch. So besides data, also STMP breaking out on no volume. Joining that no volume breakout is Tesla Motors. What the hell? If this is a QE market, this is stuff that you just until they get out of the way, which they may never, ever again in our lifetime ever get out of the way. This is just something we're going to have to live with. That's a nice move. ADY bouncing off 50-day moving average and strong volume. Way too thin of a stock for me to play. Still, it's considered a very high quality long signal. I just wouldn't touch it with a 10-foot pole in any of my accounts because it's just too thin. And ZOLT, very fabulous move off the 50-day moving average, strong volume. But on such a move from such a flat base, I would like to see BOP explode more with volume to really get long. Zolt, the last time it made a move, a breakout move in May, it failed it. So it'll probably work this time since I'm not taking the signal, but it's just not good enough for me. The only long signal good enough for me today is REGI. This is an oil and gas refining stock. Very nice breakout from a flat base. Very nice. The only problem is that once again, I wish I could have seen more BOP surge, and even on that note, even more volume surge. So the breakout isn't great, but it is strong, especially considering the April to June uptrend that was on a very heavy volume, solid green BOP. And the one thing that Reggie has going for it that some of the other stocks I showed you did not is that the relative strength line is already hitting a new high, so it's outperforming the market. Still, thanks to the market that we are in with all the mixed signals, this is a 1%er. Yes, we've had enough long signals fail now or not act properly that we're down to the smallest possible position size on long positions, especially under a sell signal. REGI is 1% in the risk account. That means 1% of my total account capital, whatever that 1% number is in your account, that's what goes into this stock. And then in the non-risk account, 0%. That means nothing. Zero, nada, nil goes into the position. I've had some people ask me recently about position sizing, and it's pretty clear cut, but let's say that you have $100,000. 1% is 1,000. So you put $1,000 into Reggie, and that's it. It's that simple. What's not simple, though, is the market. It's summertime, choppy time. Warned you about this after May 22nd, and it's coming to fruition. Be very nimble, quick, flexible out there. Keep position smalls or do not trade at all, especially if you are new. Aloha.